Hello and welcome. United Airlines faced a very challenging situation in 2020 due to COVID because the whole airline industry halted, leaving the United Airlines with almost zero cash flowing from their operations. To keep the company alive, they had to get cash inflow in other ways since their operations stopped completely. The company issued about 70 million new shares, which diluted the investors by about 28% and caused their share price to take a nosedive. Unfortunately, United is still issuing a small percentage of shares every year since then. Well, the cash from the new shares wasn't enough for the company, so they took on more debt. In 2020, they increased the debt by about 84%, from 14.5 billion to 26.7 billion. And they continue to take on more debt because in 2022, the debt is 31.1 billion or 114% increase in debt compared to pre-pandemic level. The really concerning thing is their ability to pay the interest expense. In 2022, they only made 3 times the interest expense, while pre-pandemic level it was 9 times. And the minimum that investors look for before every red light in the dashboard turns on is 7 times the interest expense. Another issue has to do with United's ability to make profit is the aircraft fuel cost, because it increased by about 46% since 2019 or $4.1 billion annually. So this increase in cost is an additional burden on United Airlines that they have to figure out. In my opinion, United Airlines could easily be classified as a risky investment because any new issue United Airlines might experience in their operations could force them to issue more stocks or take on more debt that they can't afford, which possibly sending the share price into the penny stock territory. At the same time, I want to show you the other side argument. I want to show you the early signs of coming back as a profitable company that can get all the cash they need from their operations. The first good sign is that the revenue in 2022 passed pre-pandemic level. The second good sign is that the net income is positive for the first time since 2020. And the operating margin is also positive for the first time since 2020. And guess what's the most important great sign that's also positive for the first time since the pandemic? Exactly, the free cash flow. Positive free cash flow is super important if you're a value investor because this cash can be reinvested in the business or pay back some of the debt. But if you like to speculate when buying stocks, then you might think that other factors are more important than free cash flow. Now the million-dollar question is, can United Airlines quickly reduce their debt, buy back shares, and increase its free cash flow before they experience another turbulence in their operations? In my opinion, yes, it's highly possible. But of course, no one knows what events could happen in the future that could hurt United Airlines or the airlines industry in general. Now let's talk about the valuation. I always try to find an element in the financial statements that has a consistent ratio with the revenue. In this case, I'm using the operating property and equipment to revenue ratio. Using a 5% return on investment ratio gives us $182.73 intrinsic value for one United Airlines share. But 5% does not address the higher than usual risk for this investment, so if we increase the return on investment ratio to 23%, then the intrinsic value is $39.72 per share, which is very close to the current market price. 23% return on investment ratio is a great investment entry point for me. And in my opinion, the company is coming back as a profitable company. So I want to buy 30 shares for $38 a share because I think this week the market is rallying as a result of some good news about the interest rates. Do you think I should wait for a week or two before I send this order? Or you think that this is a good investment and I should buy more than 30 shares? Let me know what's your opinion. Thank you for watching this video to the end and see you in another video.